Good day, ladies and gentlemen. In this video I'm going to be teaching you market structure. Okay, as you already know, if you want to be a successful trader, you definitely need to understand what market structure is all about. Okay, so if you're a beginner trader and you have never heard of market structure before, or you don't really know what market structure is about, this is a good video to start because I will be starting from the basics. All right, so let's get right into it. I may not teach you everything in this video, but definitely I'll make another video to continue. Okay, so what will I be teaching you in this particular video? Before I proceed, you already know that the market moves in three ways. The very first way is the uptrend, where we have higher highs and higher lows being created. That's the first way by which the market moves. The second way is downtrend, where you have what? Lower highs and lower lows being created in the market. And the third way by which the market moves is in a consolidation, or let's call it a sideways market or sideways movement, where you have price moving within a tight range. You can also call it a ranging market. Okay, so price is neither moving upwards or downwards. Instead, it is caught between these two boundaries, and it just keeps going back and forth within the boundaries in a sideways manner. Okay, so those are the three ways by which the market moves. So aside from talking about how the market moves, the three things I'm going to be teaching you, or let me take just two, so the video will not be too long. The two things I will be teaching you today are: number one, I'll be teaching you about expansion and retracements. Okay, expansion and retracements. That's the very first thing I'll teach you. While the second thing I'm going to be teaching you today that you'll be learning from this video has to do with what I call SMS. Okay, SMS. Now SMS simply means a shift in market structure. This SMS is what ICT traders rebranded to MSS. Okay, if you check the old textbooks about market structure, what you're going to see is SMS. All right, so it was just rebranded to MSS, and a lot of us know it as market structure shift. Actually, in the old textbooks it is SMS, which is shift in market structure. Okay, so let's dive right into it. Now, what is expansion and what is retracement? Expansion is simply an impulsive move in the market, where the market moves impulsively in one direction. It could be downwards or upwards. That is what we call expansion. While retracement is more like the corrective move, whereby price comes back a bit, moves in a direction against the expansion direction. Okay, so if the expansion direction is upwards, price is going to come downwards a bit, all right, before continuing with another expansion. Then it comes downwards a bit, then continues with another expansion, giving you a trend, which is either an uptrend or a downtrend, depending on if the expansion was actually upwards. Okay, so expansion is simply an impulsive move. So if the impulsive move was downwards like this, then you would have a correction move, which is what we call retracements. Okay, then it continues with another expansion move, which is the impulsive move. Then you have another retracement or a correction move. Then it continues with an impulsive move, forming what we call a downtrend. As simple as that. So that's what we know as expansion and retracement, and I have a very good example for you right on the live charts right here. Okay, so look at this. What do we see happening? It is an expansion to the upside. Then I can call all of these retracements. Okay, this is a retracement, like price going against the direction of the price of the expansion. Then you have another expansion taking us upwards. Then you have a retracement downwards. Then you have expansion upwards again. You see this happening anytime there is a trend. Okay, so this is an expansion right here. Then you have a small retracement here. Then you have another expansion. You have retracement, you have expansion, and it just keeps going like that. Okay, so if you have an uptrend or a downtrend, you will always have expansions and retracements. So you can go, if you're a beginner trader, you can go and open your chart and see if you can actually spot the expansions and the retracements. So what then is market structure shifts in market structure, as I called it, which is SMS, shift in market structure? What is that about? You would notice that if you have a particular trend, let's say an uptrend for example, let's take an uptrend for example, you would notice that the higher lows created are like holy levels. Okay, they are sacred, they are not to be touched. Okay, so this is an HH, which is what we call higher high, and this is an HL, which is what we call higher low. So these higher lows must not the candle must not close below your higher low in an uptrend if the uptrend is to continue. So when we have a case whereby a series of candles come down and then closes below an higher low, what we have at that particular level is what we call SMS. Okay, a shift in market structure. Because if the market structure were to remain the way it was before, then this higher low was not to be violated. Okay, so once it is violated and candles close below it, we have a shift in market structure. Okay, which ICT rebranded also as change of character. Okay, so it's still the same thing. All right, so I'm going to show you where it happened in the chart. You can see price was moving in an uptrend, giving you the expansion phase, giving you the retracements, expansion. All of this can be seen as a corrective move. Then you have expansion to the upside. Then market came down, breaking below this particular low right here. Okay, so there's an SMS in that region. Okay, an SMS took place around here because these red candles did was close below this low. Okay, so that's a shift in market structure, or you can call it market structure shift, anyhow you want to put it. So it's either an SMS or an MSS, so long you understand what is going on there. There's a violation. Okay, price was moving in an uptrend, then you add a set of candles closing below your higher low, so that signifies that there's a change in the structure of the market, which tells you that the uptrend that you were experiencing is about to come to an end. Okay, so this is where you now come and start looking forwards, start looking for entry opportunities to to trade in the downwards direction. Okay, of which you would have found one here and then you would have made money to the downside. Okay, so in subsequent videos I'm going to do more on market structure to give you a better understanding of what market structure is all about. But if you got any value from this particular video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.